So, what can you expect today? What I want to talk about today are three things. Have you lost your passion for business? Are you being the CEO of your business? And are you actually spending time reflecting on what's working and what's not working maybe in your business? So, let's jump in. I've got 13 fundamentals of managing your business. And today really is all about just giving you some ideas as to what the fundamentals are within business. And this is really applicable for startup businesses all the way through to well-established businesses that have been trading for over 10 years. I think the challenge is in today's environment where things are changing so quickly, we have to think of ourselves as entrepreneurs and startups in a lot of ways. Some of the benefits of having an established business is some of these fundamentals you may have in place. But what I would really ask you to get curious about today is to think about whether you need to change the fundamentals that you might have set up 5 years ago, maybe even 10 years ago. We know that the speed of change is so fast that we can't sit here thinking that it's all working, because who knows, you're going to get disrupted in 12 months or even in 5 years. So what I want to talk about is the 13 fundamentals. So let's have a look, and I'm going to spend probably 1 or 2 minutes literally on each slide. So think about your questions as we go, and happy to answer them at the end or as we go along. So the first thing clearly is how much money you're going to make. This is all around revenue and pricing. It's obviously an obvious aspect of your business, but we really need to make sure that the challenge here is that you're correctly calculating a return on your time and expertise. And I think about a lot of problems and challenges from two aspects, from the bottom up and from the top down. So when you're thinking from the top down, you're being the advisory board, you're being the CEO, you're looking big picture and coming from the top down. When you come from the bottom up, you're thinking like a team lead, a business manager, a unit manager, an operations manager, and you're really close at the coalface. You really know what the challenges are, and you're coming from this challenge from the bottom up. And I think if you can meet yourself halfway, then you've really covered the strategic element of pricing and the operational element of pricing. So one thing to think about here is your triangle. If you think about drawing your own triangle for your revenue, at the top is obviously a smaller piece, and that has to be the expensive element of your revenue. So think about how you earn your money, and you need to offer your clientele, your market, a number of different opportunities to come in and work with you. So at the top of the triangle, it's going to be one-to-one. This is going to be the expensive stuff. This is going to be your expertise where the client is getting lots of your time. At the bottom of the triangle where you've got a bigger space, this is one-to-many. This is where you, in time, are not spending your time, if that makes sense. So if you think about a consulting or a service-based business, at the top it's one-on-one. So I'm working with you directly. It's going to cost you $10,000 a day, whatever that number is. At the bottom, it's going to be, you're not going to work with me, but I have built this automated system where you can get my expertise, but you're not going to get my time. And that you automate on some kind of online program where that might be $100 to buy. Okay, so you see that you've got the market covered in each element, and it de-risks your revenue. It means that potentially if you've got 1,000 people on your $100 a day model, that's going to happen, and that's going to turn the handle whilst you're sleeping. And then when you want to work, the top of the triangle is where that's where the great value, and that's potentially where you want to actually spend your time. So fundamental number 2 is all about your assets. Do you think about your business like this? Do you think about what assets actually run your business? And for most people, that's either going to be time or it's going to be a product. So think about your time, think about your team's time, and think about utilization of assets. So for example, if you've got a team of maybe 1 or 5, of people that are in your business. They're either helping to run your business or they're helping you to drive revenue in your business, right? And you need to make sure that you know exactly how they're spending their time. So how you monitor that, how you track that through a timesheet system, you have to know that if someone's spending 40 hours a week for you, how much of that is revenue generating and how much of that is admin building. And this is really important to get your pricing right. So if you think about fictitious numbers here to show an example, but think about if someone's costing you $1,000 a day in your team, and you want to be able to recover their cost in your charging out, you have to assume that the best you're going to get out of that person is 75% of revenue generation. Because if you think about it, over the year, they've got sick days, they've got annual leave, they've got public holidays. You take those out of the equation, and we know that people are not going to be generating revenue 100% of the time. So if it's costing you $1,000 a day, you need to divide that by 0.75, which is your 75% utilization. So that gives you a real cost of $1,333. Not $1,000, they cost you $1,300 because you're only going to get, at best, 75%, and sometimes you only get 50%. So you're going to have to divide it by 0.5, and they're actually costing you $1,500 a day. So if you actually want to make profit on top of that, you've actually got to then gross up that $1,300 a day by whatever margin you want to make. So if you want to make a 30% margin, that's going to be an extra $400 on top, and that's $1,700. So you can see where potentially you might be able to make more money, or you can see where you're going to avoid getting into negative territory where that $1,000 a day labor resource you actually have to charge out at $1,700. And that doesn't include any overheads and fixed costs, which is our next slide. So fundamental 3 is around recovery of fixed costs. And now, if you think about how you segment your business, you really need to get clear about what costs fall into which bucket. And you need to have a gross margin bucket and then a net margin bucket. So what are the costs associated with you earning revenue? And that is a gross margin. And then think about the cost of running your business, but not necessarily directed at particular revenue types. So examples of fixed costs could be rent, IT, it could be, let me think, stationery, all the sort of general costs of running a business that you would have to spend no matter how much revenue you have coming in, really. And that, from a corporate lens, we would always try and make sure that that was never 20% of revenue. If you've got overheads that come to more than 20% of your revenue, I would say you haven't got enough revenue or you've got too much fixed costs. And that's the whole scaling impact. So it's really important to look at your costs and try and associate those that are driving revenue versus those that just keep the lights on in your business, and make sure when you've got accounting systems that you're allocating those costs in that way. So moving on to understanding your business and understanding how sustainable is your business and where your break-even point is. It's really important to understand this because it's going to give you the tools to be able to grow and understand the investment that's needed in your business. It doesn't matter whether I think you're a startup or whether you're an established business. You've always got to have your eyes on the future. You've got to think about where is your appetite to invest in your business. So you might have a $10 million business, but if your revenue is starting to decline, or you're seeing a decline in the market, or you're seeing decline in the demand for your product, even if you're not seeing it in your numbers yet, you really need to have your eyes fixed firmly on the future. Because if you need to pivot, you're better off being aware of that fact as early as possible. Also thinking about this parallel strategy. Think about if you've got a really profitable business now, but in the next 5 years it's going to change and your market is moving, and so you need to make sure that you've got enough visibility that says, I know that I'm going to have to pivot, change, bring in more people, potentially throw away a platform that I've just spent 10 years building, and I'm going to have to invest into a new platform. You need to be thinking about that in parallel with running your business. And a lot of people think about this from, how much do I need to invest? So let's say, for example, I've got a business that's delivering a great return for me now, but I know that potentially in 5 years it's going to change. I know I need to invest $100,000 over the next 5 years. How you're going to do that is actually, well, can I actually take some of my profit from my current revenue and margin to invest in that $100,000 change that I need to make, or am I going to have to go off and get funding? And again, better to know it now and to get it out in the open so that you're able to prepare for that, rather than burying your head in the sand, potentially thinking, oh, it will be okay. So really getting clear about the future, really getting clear about your customer as well. And we're all customers in today's world. And so how do you feel when you go out and spend your money? Do you feel like you're getting listened to? Do you feel like people care about you? So how do you understand your customers? And some big brands are doing it. It feels like some big brands don't care about it, but I would suggest, if they're not really understanding what their customer wants and how that customer wants to buy from them, then they're going to get seriously impacted in the next 5 to 10 years. As smaller type businesses, we can get closer. We are closer to our customer, and we understand when those customer needs change, and we're able to move a lot faster. So good old pipeline. This is so important. Next to cash flow, I think pipeline is one of the most important aspects of our business. We've really got to understand how our pipeline is built up. And we've got to understand 3 things. We've got to understand how many prospects we need at the top of the funnel. We need to understand what our conversion rate is and how successful we are of converting those prospects into revenue. And then we need to understand what the wins are and how do we manage those wins for the first piece, but also how do we keep those wins potentially? How do we keep those customers keep coming back to us? So have you thought about how wide your funnel should be? Now, to give you some really simple numbers, if we know that we want 10 wins, and that is 10 lots of revenue. So say we want, $100,000 from each of those 10, we want $1 million of revenue coming into our business. So we know if we've got a converting rate of 10%, we know that we've got to have 100 in the top of the pipe. If we want 10 wins at the bottom and we've only got a 10% conversion rate, then we know that we need 100 at the top. Okay, so think about what your conversion is, and if we're not measuring it now, then you really need to get clear about how successful you're being. So have a think about that. What's going to really help build your pipeline is how you're showing up. So how visible are you being is really going to be what's driving your pipeline. And a lot of people I've spoken to say, got a really good business and it's all on referrals, which is awesome. Of course we love referrals, but we've also got to make sure that we're building enough at the same time in a parallel sense that what happens when those referrals stop referring. We can't just become complacent and actually just rely on the fact that we've got a great business. We might have $1 million business and it's all referrals. Or conversely, maybe those referrals continue, but you could actually have a $10 million business. Okay, so that's another set of challenges, because that means you've got to be prepared or not for actually having a $10 million business if you've got a $1 million business. So really think about if you're relying on referrals, have a think, get curious about how you might be able to drive more traffic to you, to your website and into your funnel. And so you can think about that from how you're positioning, your market, and how people can see you. And of course, we'll go into that in a little bit more detail in a minute around positioning and how do you get that growing for you. I haven't seen any questions coming up yet. So I know we are rattling through this, but I want to just give you a taste of all the fundamentals in business. And this is going to be, well, this is being recorded. So if you'd love to have the recording just so that you can go through it again, I'll be happy to let you have that. So conversion, I talked about in my earlier example around a 10% conversion rate. Now, think about how you're nurturing your leads through a series of gates. Okay, so how do you get them into the top of the funnel, and then how do you move them through that process, that sequencing of nurturing? And it's something that's obviously important because you want to make sure that your touch points, the amount of time that you spend on getting those leads into revenue, is automated as where it makes sense to be automated, but you don't lose that one-on-one touch. So we've all probably experienced some pretty bad sequencing and nurturing procedures, but have a think about, if your numbers are, you've got 10,000 at the top of your pipeline, then clearly you're not going to be able to talk to each one of those leads to get them into a funnel and into that nurturing sequence. So you're going to have to rely on some personalized automations. And for those that are listening in the LBD community, we've got people that actually, that's their business. They help people with that whole sequencing and automation and the nurturing process. So, and some of this might be very simple. It's just, a 5-line email. So you get somebody in the top of your funnel that have followed you, have come to a webinar like this. The next stage is, these are the 5 things that you need to think about in terms of your business. So this is exactly what I'm doing here. You can see what my expertise is, and you can then very quickly decide whether it's something that's going to be applicable to you and you want to know more. So think about this in your business. What is your expertise? How do you give away some high-level information so it makes people want to know more, and they come through that funnel sequencing because they want to follow you and they want to work with you? And it could just be a very simple automated email of 3-4 lines that says, thanks for coming to my webinar. I really hope that you really loved some of the fundamentals. What are the 3 things that are important to you? Get them to actually talk to you. That's really key so that you can understand your client's problems. Okay, so cash flow. Oh my God, this is so important. This is what drives your business. And without this is the first measure of when things are going bad, because it's not the profits, it's not the revenue, it's the cash. So be really clear about how much cash you need as a buffer to invest in your business. So we call it in the trade working capital. How much money have you got today that's going to pay all your creditors, all your employees, all your rent payments, all your obligations? How much money have you got today that's going to be able to pay that for the next 30 days? Most businesses, most large businesses, would have at least 3 months. So if you couldn't earn any money for 3 months revenue, but you've got staff and rent and all the bills that are coming in, you've got enough money in the bank to be able to pay the next 120 days. So have a think about where you are in your business. We'll touch on this in a couple of slides' time around how you're actually structuring your business. But if you're using automated platforms like Xero, the working capital, the balance sheet will give you very easy to see where your working capital is. How much money have you got in the bank? How much money is owed to you by your customers? How much money do you owe to your suppliers? And that's your working capital. Project management. And so think about this not just specifically in managing a project. I mean, your business is a project. So it could be a client, if you're in recruitment, it could be a client that you consider to be a project. A candidate comes to you, they could be a project. You need to get them into a new role, and that's your project. So don't just think about this as delivering a project of, a refurbishment, or delivering some kind of tech project where, when I've been in corporate, where we're delivering to a major bank on an actual piece of tech or an app. So think about projects a bit more loosely, but always make sure that you're tracking projects and the profitability and where people are spending their time on projects. So make sure you've got cadence of meetings, you've got structure, you've got reporting, and you've got ownership and accountability. You need to know when that project is 5, 10, 15% complete, 50% complete. 75% complete, 90% complete, and 100% complete. You've got risks along the way. You've got revenue along the way. You've got cash flow along the way. So make sure if you've got a $100,000 project that you haven't left the $100,000 to be paid to you at the end of the project. I mean, this might sound obvious, but let's take it to the extreme. You've got a $100,000 project. You haven't got the gates working in your favor, and you're waiting the whole project, which might be 3 months, it might be 6 months, and you're only getting the cash at the end of that period when you've got everything signed off. That's clearly leaving you very much exposed into paying your people when you haven't got any revenue coming in. So think about setting that up when you first take on a project. Make sure you've got cash coming to you throughout the project, and you've got cash at the startup before you've actually even done anything as well. But think about also managing that project from a customer perspective. Okay, so you might be out there being the CEO of your business, and you've got a project manager, you've got a team lead that's running your $100,000 project, and you've empowered them to be accountable and responsible for that project, which is awesome. But you've got to come back in. You've got to come back in at least once a month, at least, because you've got to make sure that you really understand whether that project's on track. Because if it's not on track and something's gone out of scope or something's changed, which it will have, you need to have conversations with the customer really, really often. I've worked in a tech company where we were delivering to a major grocer, and it was a $500,000 project, and we had gone through to almost 90% completion, and there was so much in that project that we had worked on and delivered that was out of scope. And so it's really hard to have a conversation when you're 90% complete to tell the customer all of a sudden, you know, you've incurred $100,000 of expenses on that project. Much better to know that the moment that it starts going off the grid in terms of where you expected it to be. So make sure you're coming back in on at least a month. I would suggest fortnightly on big projects, but definitely a month. And all you need is someone to report back to you, but always be thinking about the questions that that person that's reporting to you doesn't want you to ask them. So always be thinking around the challenging questions. What are they not telling me? What are they not telling me? What are they not telling me? Not because you don't trust them, but because they are obviously going to report on the things that are working well. So make sure you get underneath the hood and you actually find out, tell me what's not going right. Tell me tell me the hardest question that you didn't want to answer today. Just put it out there and then silence. Let them do the talking. Leadership. So I talked at the beginning about whether you've lost your passion for your business and are you being the CEO of your business. Now, even if you're a small business, if you're sub $500,000 revenue, you're the leader of your business. Okay, you might have 1 staff, you might have 5 staff. You've got to be a motivator, okay, and you've got to be a passionate motivator that people want to follow. And often when we've got a small business, that's really hard to spend the time bringing people with you. But if you don't bring people with you, then you're not going to have that support. Okay, people can't predict what it is you're thinking. They can't mind read what you're thinking. You have to be really clear about the direction that you want to take in your business. You've got to empower your people to actually follow your dream. And you do that through behaviors and motivating. You do it through inclusivity and you do it through accountability, but you do it through your vision. And I would suggest at least once a quarter, you get people in a room for half a day or even a day and just talk about your strategy. Because if you're changing business fast, then it's really important that people keep up with you and they know what's going on, that they're not worried that business is changing. They actually come with you and they feel very passionate about the same things that you do. So have a real hard look at yourself, hold a mirror up and say, how much of this am I actually doing, or am I just hoping? I'm so busy, head down, that I haven't got time to bring people with me. But we've got, unfortunately, that might be the case, but we've got to step back out. We've got to do that helicopter view, and we've actually got to try and get out of the transactions, get out of the weeds, and actually really look about ourselves and who's following us, and have people got the right things to do, and are they actually accountable, and do they get excited? You've got to make this really exciting. Unfortunately, it's going to be investment of your energy in making it exciting for others. And if you're not in this business to be a leader, then I would really say to you, either get somebody in else to be the GM of your business, or don't have a leadership team. Don't have a team that you have to lead, because if it's not something you like doing, then it's not something you're going to enjoy. So vision and purpose, why are we in business? And this could change. So be really clear. You have to do this every 6 months. We do it in corporate businesses, even the big banks, all the big ASX 300 businesses, we've got to get really clear about what our vision is and why we're doing it. And think about timeframes, think about the strategy. It will help you in every decision that you make. Are you building up success, business for success, or are you bringing in too many limits on yourself or on the others through that uncertainty of what risks you want to take? So make sure you spend at least 2 days every year thinking about, what is my strategy? What are the fundamentals? What is it that I'm here to do? What is it that I'm delivering in my business? Why am I doing it? Getting clear about your mission and your values, and then you can actually work out the key criteria of why you're in business, and make sure you share that with your team. So it has to be a documented process that you actually can bring to life. If you look at any ASX 300 business, everyone has got a document that you can point to and say, this is who I am, this is why I'm in business, this is what I care about, this is how we deliver our product to market, so that people understand that. And you get clarity. Once you've got clarity of why you're doing it, it comes across, and it's a lot easier to explain to others. I'll talk about clarity a bit further in a minute. So I touched on this a little earlier. Structure and compliance is so important. And people often say to me, oh, I'm small, I haven't kind of got that thinking yet. But I would suggest, and I did this in my business, I've been trading now since 1st of July last year. And, I set up immediately Xero. I set up an ABN. I registered for GST. I mean, this might not come as a surprise because I'm a finance background individual, but it just makes life a lot easier when I'm actually running, a proper business and accounting for it, so that I can see how I'm tracking. I've got terms and conditions, so I think initially you've got to spend $5,000. I think the barriers to entry for setting up a business are too low. I think lots of people jump in, which is awesome, but lots of people don't realize the cost of setting up a business. And I would say it's at least $5,000 just to get a Xero license, to get some help from an accounting or legal, and definitely a legal perspective, where you can get terms and conditions, privacy policy, you can get a website landing page, you get your basics. So you can obviously spend far more than $5,000, but I would say that's your minimum. And you've got to get templates built, you've got to get branding, so even light touch, it's $5,000. And I think we've got to really outsource that admin side of our business to experts. It may or may not surprise you if I say to you, I have an accountant. I mean, I could absolutely do that work myself. That's bread and butter, but that's not my business. I'm in the business of helping others be more successful, and I want to help that through strategic workshops. I want to do that through one-on-one coaching. It's not my business to be on Xero doing invoicing and booking payments and doing that admin. I've got an accountant. So look at what you're doing and really get clear, and be strong about, what am I spending my time on? Do your own time and motion study. So if I'm spending 5 hours a week on admin, it means I'm not spending 5 hours a week on building teams, building revenue, working on my pipeline, all these things that you need to be doing as a business owner, not doing the admin in Xero. Okay. So huge amount of importance around marketing and platform and social, because this fundamentally is how you're going to sustain your business and grow your business. So being visible is really important. And I've spoken about this a lot around how visible are you being? Are you invisible or are you in demand? And if you think about those two ends of the spectrum, where are you? And a lot of people say, oh, I'm a very private person, I don't like doing social media. Well, that's going to be a challenge for you, I think, going forward. Unless you've got a never-ending supply of referrals coming your way, you've got to embrace digital and social media. And you've got to be consistently thinking, because the algorithms are always changing, about how visible are you being, where are you showing up, how are people seeing you, what's your exposure like, and do people actually know and aware of your business? You know, I talk to people a lot about having a platform, having a profile. If LinkedIn is your place, Facebook, Instagram, you know, I think you actually probably need to do all of them, because you're going to have a market from 20 to 60 potentially in terms of your client base, and they're all going to consume your information and who you are very much in different ways. So yes, the phone calls are beautiful, the things that come through the mail, lots of people like that, but you've got to do everything. And that sounds pretty overwhelming, but you've got to be able to do everything, but not completely high touch. So choose where you're going to spend your time, try and outsource what you can, try and build up what you can, and prepare in advance. You know, at the start of 2019, I had a word for every quarter, and I had a word for every week, and I know that I can write a blog on that word that comes up in that week. And so I don't have to think about what am I going to write about this week, because I've already planned it out back in January. So absolutely start thinking about what does 2020 look like for you, and how are you going to show up, and how visible are you being now, and how are you going to close that gap between where you want to be, you know, at the start of January, February 2020. So I do this with the LBD ladies, where we actually look at where's our following. And if we got the, you know, again, if we've got the following, we probably get 7% on LinkedIn. I've heard recently 7% of your market will actually see you. So sometimes you think you're being really noisy and you're showing up and you're doing something on a regular basis in terms of posting, but if only 7% are seeing it, then, you know, do the maths. It's not a great return for you. Recently, LinkedIn have changed the algorithms so that if you're just liking and comment, if you're just liking and putting a very small comment about good posts, we spoke about this at a dinner recently, and it was, you know, you're lurking. Liking is lurking, so don't be a lurker. If you like things that come up on LinkedIn, save them up in the three dots. There's a little click there, and you can save them for later. Save an article that you like, comment on it, reshare it. Start building that engagement, and that will help with your algorithms when you're posting things. Again, I did a quick diagnostic on 10 ladies that I had for dinner last week, and, you know, more than half were not even blogging. So, you know, this is really going to impact you, if not now in your business, in the next 5 years. I think if you're not building up, following, the blogs, the likes, the comments, you've got to really crank the handle on your algorithm. So it's something to think about really seriously, the exposure and awareness in your local market, but also on a global platform. So it goes back to, why are you doing this? Why are you in business? And are you in business for, you know, a Melbourne business or a Sydney business or a Brisbane business? But, you know, is that going to be enough? Or do you want to be Australia-wide, or do you want to be global? And if you want to be Australia-wide, you've got to make more investment in your marketing and your social. But if you want to be global, then you've actually got to be in the right ballpark to play the game. So get clarity about what you want, and then start thinking about how to make that happen. Friction. Don't wait to be disrupted. Okay, look at your business, look at your market, look at everything in your business and your market that may or may not be working, that may be disrupted, and think about getting the forecasting around how easy it's going to be for you to pivot and change into aspects where customers want to buy you differently. Also think about friction from a how easy are you to deal with? How easy is it for your customer to buy your service? And this is easy to demonstrate when you think about buying a product. How many times have you been on a website where you're buying a product, or you're buying a hotel, or you're buying something online, and there's been too many buttons to click in the checkout process, or something fell over and you just thought, oh, I'm not even going to continue with this. So think about this from the outside in. Again, that helicopter view. If you were up at 10,000 feet looking at you, looking at your business, what would you say about yourself? How easy are you being to deal with? So think about how easy is it for someone to pay for something with you, to see you, to go through that process of buying. Really get curious about how easy are you being. And if you've got great success, then don't just rest on your laurels around that success. Actually start disrupting and thinking about how you can improve already. So it's really about that continuous improvement. So let's talk. If there's questions, please put them into the chat room. I would love to be able to answer your questions online today. If you feel like we rattled through that very quickly, you're right. I wanted to give you a taste of the fundamentals in business. And as I said at the start, it doesn't matter whether you've a startup business or whether you've got an established business, all of these fundamentals are really relevant for you. And so think about where you are on each of them. What I'm going to do in 2020 is actually build a workshop series that talks to each one of these. So this is really a sort of taster for what's coming. And I just wanted to use this as an opportunity to start building my funnel so that, you know, you're interested in knowing more. So it is around that consistency of effort. It is around you being the leader. It is around having a strategy. You know, I think a lot of us in business and in careers have achieved a level of success because, you know, we've been fortunate to have that success. We've either been in the right place at the right time, or we've got a really beautiful product and service, and we've got all these people that we know through friends of friends and referrals, which is totally fantastic. But what about what next? So we've really got to think about that strategy, and not just think about it, but actually write it down. And so 2020, you know, for me as a numbers person, is really around the new decade, new beginnings. So get curious about where you are and where you want to be. So let's chat, let's connect, and I can't wait to help you and start your thinking. And also having that visionary, having that clarity around your thinking. I'm here to be a sounding board for you, but also to be an advisor in your business. So reach out. I'm here on PK Advisory and LinkedIn, Facebook, and all the normal channels. So I might leave that there, and if I've got any questions, then please pop them into the chat room. I'd love to answer them. I'll just give you a few moments. I've got one question coming up that says, my challenge is, how do I deliver a service when I'm on my own in my business? But how do I set up to deliver that service and actually earn at the same time? And that's really a challenge. And so that really, for me, is about time management. And back to the point I made about outsourcing to experts, the things that you shouldn't be doing, so that you can spend time. Your time is best spent two things: really getting good at delivering your service. So you've got to think about building content. You've got to think about how you do that, how you deliver that service. In my example, putting this slideshow together, putting the fundamentals behind those 13, putting a workshop behind those 13 fundamentals is where my time is best spent. My thinking time is best spent. It's not the doing of the admin. It's not doing, you know, some of the other work. It's actually getting people to outsource that. So that's going to cost you money, and that's why you've got to be clear about what you need and how much money have you got to invest in your business. So hopefully that's helped. So yeah, please get in contact with me on www.pkadvisory.com.au, and I look forward to helping you soon. So good luck in your business. And I'm going to end the webinar there.